Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Just a couple of weeks away exactly from elections here in the United States. We're going to be spending quite a bit of time, at least in our first block, talking politics. Speaking of that, we are learning now that former President Donald Trump is expected to record an interview with Joe Rogan at his studio in Austin, Texas. This is coming from Politico, citing a person familiar with the plans. Kamala Harris has also been in talks to go on Rogan's podcast, according to Politico. Well, he's a billionaire. He tweets whatever comes to his mind. He's been, quote, trashing Kamala nonstop. Those are his words. And now finds himself Democrats' new supervillain. No, we're not talking about Donald Trump. We're talking about Tesla CEO and the world's wealthiest person, Elon Musk. The latest federal filings show that Musk has poured at least $75 million into his America Political Action Committee, making him one of the top donors overall this cycle. Trump, for his part, has heartily reciprocated Musk's embrace. Here's Trump speaking about Musk in recent weeks.
And Elon, because he's not very busy, has agreed to head that task force. Be interesting. If he has the time, that'd be a good one to do it. Elon will always come through. We know that. And by the way, Elon Musk is a great friend of mine. He gave me a tremendous endorsement. He's right now campaigning in Pennsylvania because he thinks we have to win. Our trade policies will make it very, very rich. That's why a guy like Elon Musk is supporting me, because he knows what's going to happen.
Well, there you have it. Donald Trump in recent days and in recent weeks speaking about Elon Musk. We've got with us Josh Green. He's Bloomberg Businessweek national correspondent. He's also the author of the #1 New York Times bestseller, Devil's Bargain, Steve Bannon, Donald Trump, and the storming of the presidency. And more recently, the rebels, Elizabeth Warren, Bernie Sanders, AOC, and the rise of the new left. He joins us from Washington, D.C. Josh, welcome. You write that Elon Musk is now a central target for opposition to Trump. When we think about this, on its surface, I mean, this is a guy who voted for Barack Obama. He waited in line. He talks about this to meet Barack Obama. He created a company that I think some say argue whether he created it or not, but he helmed the company that really changed the way the world thinks about EVs, so, environmentally friendly. How do you explain his evolution to a Trump supporter, to a Trump lover?
Well, I don't know if I can explain his evolution, but in terms of politics, he has become so fiercely identified with MAGA and with Donald Trump. The Democrats and liberal groups have stood up and taken notice, and he's such a polarizing figure and so emblematic, I think, of the kind of rich, dark money billionaires that liberals like to demonize in their political ads, that Elon has been popping up in more and more ads across the country, whether it's from Kamala Harris's campaign or congressional candidates or unions or liberal super PACs. More and more of them are featuring Elon in their political ads. A lot of them are even featuring the same footage of him in a tuxedo. So as I write in the piece, he's kind of eclipsed the Koch brothers as the leading villain among Democratic ad makers, and it's clear that it's resonating with liberal voters.
Without giving the full piece away, because of course we want everyone to go read Bloomberg Businessweek, what are some of those tactics that the Democratic Party is using when they are painting Elon Musk as the super villain here? What are they really touching on?
Well, there are two themes that Democratic ad makers really key in on, and Elon happens to encompass both of them. The first is Democrats obviously for decades have been going after what they would call, greedy corporate billionaires. Elon Musk is the world's richest man, certainly fits that billing. The other thing that I think has become more popular among liberal ad makers in the time of Trump is raising fears of kind of right-wing media manipulation. And of course, Musk, with his ownership of Twitter, also fills that bucket. So in a lot of ways, he's kind of emerged as this cycle's perfect Democratic villain. And the fact that he arouses such intense emotions in liberals, causing them either to click and give money or to volunteer for Democratic campaigns, I think just shows that he's really an important new player in politics this cycle in a way that most people, I don't think, would have anticipated even a year or two ago.
Yeah, I think that's certainly fair to say. Josh, you mentioned that it's resonating with Democratic donors, with the electorate. What do we know about polling and the way that Democrats versus Republicans feel about Elon Musk?
Well, perhaps not surprisingly, Elon Musk is very, very unpopular with Democrats and especially younger liberal Democrats. And we know this because the Bloomberg News Morning Consult swing state poll actually went last month and asked people about their favorable and unfavorable ratings on Elon Musk the same way they would with a politician like Trump or Harris. And sure enough, Elon is becoming viewed in much the same way that a partisan politician would, where Republicans, their views of him have improved. A lot of them like what they hear from him, whereas Democrats, who were once very positive about Musk because of his association with Tesla and electric cars and environmentalism, now have turned on him very sharply, and he's deeply underwater. I think something to the extent of 17% are favorable and something like 79 or 80% unfavorable. So he's every bit as unpopular, or almost as unpopular with Democrats as is Donald Trump.
And what do we know so far about how effective it is for the Republican Party to be using Elon Musk in a positive light as opposed to the Democratic Party kind of using him in negative campaign advertisements?
Well, it's a great question. I mean, we do have some indications that Elon is effective. Donald Trump's campaign sends out literally daily emails offering to sell the Elon Musk dark MAGA hat, the black Make America Great hat that Musk wore at his rally with Trump in Butler, Pennsylvania a couple weeks ago. I get a barrage of emails from the Trump campaign touting his association with Elon or Elon's offer to match funding. And so the Trump campaign seems to feel that he's a very effective fundraiser because they keep pumping out these emails. So, as one of my Democratic sources told me in the piece, Elon is basically a walking content factory. You can't look away from him. So I think the story here really is that whether you're a Republican campaign or a Democratic campaign, Elon Musk has become such a central figure that it's advantageous to put him in political ads, whether that's touting his association with Donald Trump or attacking his association with Donald Trump. It can raise money either way.
Josh, I think what's notable about this is, your story comes out on the same day that the New York Times writes about how somebody like Jamie Dimon over at JP Morgan is supporting Kamala Harris, but is reticent to come out and even say so for fear of alienating people who work for him, for fear of alienating customers and the like. Elon Musk doesn't show any of that fear. And he runs or is at the helm of several companies. And you don't often see people in positions in business take a stand such as Elon Musk is doing. And I wonder what your view is on that and what's unique about this case and unique about Elon Musk. The Koch brothers certainly had the money and they were donating the money, but they weren't out there jumping around on stage at rallies.
Yeah, that's right. I mean, look, the kind of old-style Democratic villain were these reclusive fossil fuel billionaires like the Koch brothers who didn't want to be in the media, didn't want to be featured. And now we have this new style villain in Elon Musk who seems as eager to be out there and in front of the cameras and being the center of attention as anybody. And that's made the Democrats' job really easy for them. As to why Musk has decided to identify himself so strongly with the MAGA movement and Donald Trump, I really can't say. I mean, I know anecdotally, and you can see it in the polling numbers that we have, that liberal Tesla owners are very upset about this. Democrats don't like him. Presumably, this is going to have some effect on the margins of his companies, but he has decided for whatever reason, maybe because he has so much money, maybe because he's such a true believer in Trump and what he stands for, that he doesn't care and he's going to go out and do this anyway. And I think that's one reason why Musk has unexpectedly emerged as one of the most fascinating figures on my beat of presidential politics. He's a new character, he's out there, and he's demanding that the spotlight be on him. And I think as a result, it is on him, and we're seeing all the different influences and effects that he can have on a presidential presidential race.
And of course, one of those influences is the money involved. Tim had mentioned this,
Yes.
but the latest federal filings show that Musk has poured at least $75 million into the PAC that supports Donald Trump. How does that stack up with other donors and then other campaigns that we know Musk has been involved in?
Well, it immediately makes him one of the single largest donors in American politics. It's remarkable. Before this cycle, he wasn't known as a major donor. And in fact, he was kind of reputed among people in D.C. in my world to be kind of a cheapskate who talked a lot but didn't write a lot of checks. Well, now he's decided that he wants to be one of the biggest donors in American politics. And I think you can see the effect that that's had. Just in the opening segment you guys showed of all the clips of Trump mentioning Elon Musk, he brings him up again and again in public and in private. And so if Trump is elected 2 weeks from now, I think that Musk stands to be a very important figure in the Trump administration, and that he'll essentially have bought himself a level of influence that most people, even very, very rich people, are reluctant to do, to try and come out publicly and declare their association, give this much money. Elon is really plowing new ground here, and it'll be interesting to see what kind of effect that has if Trump makes it back into the White House.
Yeah, I do wonder what he would want to see when it comes to his own influence or what he would want to do. Which brings me to my next question about unions, Josh, because they play a central role in your story. And Elon Musk has had a contentious relationship with unions, given that Tesla is not a union shop and other U.S. automakers are. Talk a little bit about that and what we've heard from unions when it comes to Elon Musk.
Yeah, well, I started noticing a few weeks ago Elon kind of popping up in these political ads, and I remember thinking to myself, like, this is not something we would have seen before this cycle. So I wound up doing a very deep dive looking at the Elon Musk political ads, and some of the earliest ones that ran were by unions. The Service Employees International Union was one of the first. They had run ads around Elon even before his MAGA and Trump associations, because he was sort of the personification of what they would consider the greedy corporate union busting boss. He was in a big fight with Swedish unions at a time, and I think that really kind of gained momentum. I found other ads from Teamsters against Trump and all sorts of local unions using Musk to kind of highlight this idea that greedy bosses are screwing union workers, and Elon Musk sort of stands for everything we're fighting against. I talked to one union president for the piece who says Musk is the personification of everything that our polling tells us middle-class, ordinary workers don't like. And so it's very easy for us to feature him in our political ads because he tells the story that we're trying to tell.
Hey, Josh, speaking of stories, you wrote the book on Steve Bannon, and we'd be remiss if we didn't ask you about Steve Bannon and his influence or lack thereof on the election this time around, given that he's been serving a 120-day sentence in federal prison. He's set to be released from that next week. What are your thoughts on how Steve Bannon's influence, who had such a big one in 2016, has loomed over this cycle?
It's a great question. I think if you look at how outrageous some of the Trump claims have been, some of the events, the kind of lack of inhibitions that we see in Trump's campaign vis-a-vis what we would see from an ordinary Republican candidate, I think a lot of that goes back to Bannon and the style of politics that he pioneered. From what I understand, he's getting released from prison in a week, so he will be here for the final week of the campaign. And who knows? Wouldn't surprise me at all to see him out at a Trump campaign rally on stage with Donald Trump, leading on the crown in the days before the election. But we'll have to wait and see.
We also just got news that Donald Trump is expected to record an interview with Joe Rogan at his studio in Austin, Texas. That's according to Politico. What do you make of that? I mean, how effective is going on a podcast as big as Joe Rogan's? And the Politico report also said that Kamala Harris is also in talks to go on that podcast as well.
Yeah, look, I think it's smart for both candidates from the standpoint that young men in particular tend to be low propensity but Trump-friendly voters. So Trump going on Joe Rogan makes a lot of sense to kind of reach these young men and try and motivate them to get up off the couch and show up at the polls on November 5th. For Harris, I think the story is very much the same, is that the reason she would go on that show would be to try and make a last bid to these young men not to go support Donald Trump, but maybe to find a reason to support her, or at the very least, not be so outraged and provoked by her that they decide to go vote for Donald Trump. I think for a lot of Harris people, they would be fine having Joe Rogan's listeners just stay at home. But basically, they want to fight Trump to a draw when it comes to winning the hearts and minds of young men. So it looks like now that Joe Rogan's podcast is kind of going to be the arena for that battle to be fought, 10, 15 days before voters go to the polls.
Josh, last question. I'm not going to ask you to make a prediction here, but given your reporting and what you've heard from your visits around the country as you report out your stories, is the election indeed as close as the polls are telling us?
Yeah, I mean, I've been privy to a lot of private polling from Democrats, Democratic groups, and some Republicans over the last couple of weeks. Everyone that I've seen shows the race to be absolutely as close as the public polls that we're seeing. So my assumption is that those polls are largely accurate and that we may not know for a day or even several days who the winner of the election actually is.
All right, Josh Green, hopefully we get him one more time before polls close 2 weeks from tonight. Josh, really appreciate you taking the time. Josh Green is Bloomberg Businessweek national correspondent. He's the author of the #1 New York Times bestseller, Devil's Bargain, Steve Bannon, Donald Trump, and the Storming of the Presidency. Also The Rebels, Elizabeth Warren, Bernie Sanders, AOC, and the Rise of the New Left. And if you never want to miss a Bloomberg Businessweek story, including columns from Josh Green, become a subscriber today. You'll unlock deep reporting and analysis from reporters around the world, including unlimited access to Businessweek. Check out our offers right now at Bloomberg.com/subscribe now.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, last week, the European Central Bank lowered interest rates for the third time this year. A hastier retreat in inflation allows it to offer support to the region's stuttering economy. The key deposit rate cut by a quarter point to 3.25%. That was in line with analyst estimates. Someone who's got her hand on the pulse of the rate environment and the economy of the Eurozone and Italy is Alessandra Perazzelli. She's deputy governor of the Bank of Italy. It's the Italian central bank. She's here in the Bloomberg Businessweek studio, and she's here in New York to participate in the Bloomberg Global Regulatory Forum. Her panel coming up a little bit later. Welcome. Good to have you with us.
Thank you for having me.
Well, we know that you do not set interest rates, but give us perspective on the rate environment. Did the ECB make the right move last week?
Well, this was expected and follows like a very long period of unprecedented, very restrictive monetary policy that has taken us in 2022 and 2023 to a unprecedented situation since the euro was introduced. So it's kind of too soon to understand how this is going to play both for the banks and for the system as a whole, for the stability of the system as a whole. What I can say is that this was expected, and we will see how it goes forward in the coming months. It's clearly a situation that has been quite interesting for supervisors like myself. We have been seeing banks making unprecedented, profitability in the last years. They were rocket high, something that has, of course, created a number of impacts on the market and has, given us supervisors a little bit of a red flag on everything like credit risk and liquidity risks. And these are the issues that right now are under the limelight of the ECB, the SSM arm, which is the supervisory arm of the ECB, and of course also Bank of Italy that participates to the Eurozone and in the SSM.
So we know that Spain, Portugal, and Greece are among the countries helping to keep the Eurozone out of a recession. How would you describe the economy in Italy right now?
Well, right now, what we've seen is, the economy is being growing, in the last year. Predictions are also bringing the economy up, steadily, I would say, for the next quarters. The banking system in Italy has been strong and able to support the economy, and this is due to the work that has been done, in the last years together with the SSM. So we are looking at with some positive expectations as to the next quarter. So I would say that between Spain, Portugal, and Italy, we are, pretty much going the same direction.
What about when it comes to immigration in Italy? This is a huge topic here in the U.S. ahead of the presidential election. Our own Bloomberg News team reporting just today that Italian Prime Minister Giorgia Meloni's government is pushing through new legislation to salvage its controversial plan to curb undocumented migration after a court blocked a project to divert asylum seekers to Albania. How do you look at the role of documented migrants and undocumented migrants in the Italian economy?
Well, this is a very difficult issue that's difficult in Italy, given also the fact that we have, borders that can be easily sort of, penetrated. And this has been an issue that has been brought by a number of our governments at European level. I think that we are in the process of understanding and this issue of, catering for external aid in order to take care of undocumented immigrants is, has been very much wanted by the government. I know that right now there are some, issues that also concern the judiciary vis-a-vis that decision. We will see how it goes. For sure, this is something that Europe needs to tackle together. I mean, there isn't something that every single country can take care of. It's a European issue as much as it's an American issue.
It's interesting. That's my question, because here in the U.S., I think it's fair to say, and a lot of economists would agree, there are jobs that Americans who are born in America typically will not do in the United States. Jobs that traditionally go to migrants and migrant labor. Do those jobs exist in Italy?
More and more, I would say, yes. I think that Italians are not, taking those jobs that were traditionally there for maybe, lower income classes and lower income people. It's slowly becoming the same as it is here, maybe not with the rhythm and with the growth, that you have seen and experienced in the United States.
I want to pivot to financial regulation because Bloomberg News' Laura Noonan had written earlier in October that Germany, France, and Italy had urged the EU to show restraint in financial rulemaking and instead focus on boosting the competitiveness of the banking sector. That was the Treasury, and so we're wondering if the Bank of Italy kind of shares that stance when it comes to balancing competition and regulation.
Well, I think that if we look at the last couple of years and what happened in Switzerland and what happened with the U.S. regional banks, we clearly see that there has to be a balance between regulation and competition, but regulation is, we believe, the most important tool together with supervision in order to keep, financial stability in the euro system. And, I think that we proved that the full implementation of Basel III has given it to supervisors a harmonized set of schemes of reporting that has been extremely helpful in the years that followed the crisis of 2007, 2008. Today, if you look at the European banking market, you see that the banks are very stable and able to support the economy, and that's exactly the job they should do.
I want to talk a little bit about innovation and fintech in particular, because here in the United States, you have regulators trying to figure out the role that fintech should play when it comes compared to big banks, for example. What do you think the priorities for the next commission should be when it comes to the future of finance, when it comes to fintech companies that I speak of?
Well, in Europe, we would definitely have to complete the capital market union. That is very, very instrumental to, innovation, because it creates all the, the financial tools to finance innovation. What we see happening in Italy right now, that the competition is shifting. It's not among banks anymore, but it's also between banks and those tech companies that come from other sides of other industries.
The same here in the U.S.
It's the same as in the U.S., and there's a lot also coming from the payment system industry. So if we look at the number of licenses that we've been granting in the last few years, out of, like, say, 87, 2 were for banks and 85 for other type of financial institutions. So The thing is really, how do banks cope with legacy when it comes to the IT, with IT legacy, and how also they are entering more and more into contracts with third parties providers that come from like tech industry, and they're becoming extremely relevant also for the kind of concentration, in the European market.
But do you think your colleagues and do you think regulators in Italy are doing the right thing when it comes to embracing this technology?
I think so. We have had a lot of changes, within our own institution in order to cope with this, and created a way to talk to the market and an understanding of what kind of regulation is needed. The European Commission has issued a number of vertical and horizontal regulations that are extremely interesting, and we are now implementing those and trying to organize sort of innovation in a way which does not create instability at the market, but at the same time, we don't want to stifle it. We want newcomers, we want innovation, we want to create new industry.
And we're talking about fintech, and an issue that comes up a lot is cybersecurity. And I'm wondering how the ECB plays a role in protecting both consumers and corporations, including banks, from this emerging threat.
Well, there are now a couple of pieces of legislation that have been put together in the EU that look explicitly after a security of infrastructure, and that is, of course, an issue that concerns banks, but concerns also utilities and other important networks of the country. The one thing that it's very important, the kind of risk that we're looking at, is how interconnected the platforms are becoming, and how this role of third-party providers is increasingly important when it comes to create new ability for companies, for banks to provide these services. So I think this is main top issue on the EU legislator agenda and on ours.
We have a story by our team here at Bloomberg News about central bankers losing sleep over Europe's souring economies, have another worry looming large. How much more damage Donald Trump could cause if he returns to the White House? We're 2 weeks away from the election here in the U.S. How are you watching it?
Well, we're concerned like everybody else. And I think that, one of the issues for us regulators is that, deregulation, you will see what happened with the U.S. regional banks. There are huge banks compared to European size. And, the lack of application of Basel III, the sort of like the light touch supervision, I think it's something that worries the international markets. You don't need to be a non-internationally active bank in order to create a wave that touches then other countries and other industries.
So your concern is mostly about regulation when it comes to smaller banks?
I would say so. Yes, definitely. That is an area that has been clearly, something that has created concern in last year when, Silicon Valley Bank and the other regional banks that didn't hit the press too much, but we knew about it. And this is, of course, something that we don't know whether there can be a contagion, and how that's going to work also going towards Europe.
Alessandra Perizzelli, Deputy Governor of the Bank of Italy, the Italian central bank, joining us here in the Bloomberg Businessweek studio.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, our next guest has a great view of what's happening in the global technology, or global economy space, I should say. Aspen Technology has more than 3,000 customers, including some of the biggest players when it comes to oil and gas, chemicals, power, utilities, metals and mining, and more. Think ExxonMobil, Shell, Saudi Aramco, some of its customers. Antonio Pietri is president and CEO of Aspen Technology. He joins us here in the Bloomberg Businessweek studio. Antonio, welcome.
Thank you.
Back in August, you told our colleagues here at Bloomberg News that the economy is at, quote, the edge of a significant slowdown. Everyone is being a bit more cautious. Has your view changed at all?
No, I think Look, I think in our opinion, what our customers are dealing with and what we deal with in our own business is uncertainty. And what happens with uncertainty, people are more cautious on their spending and decision making about their businesses. We've seen that certainly in the chemical space. We experienced a little bit of that on the oil refining side, but overall we saw very good demand in our Q4 quarter, June. We still have to talk about our earnings coming up in a couple of weeks, so I won't elaborate on Q1 or the September quarter. But overall, look, we continue to be pretty resilient across what I think it's and we believe is an uncertain economic environment.
Why is it uncertain? Where's the uncertainty coming from?
Well, I think it's been a combination of interest rates, geopolitics, China demand or not. Certainly, I think the U.S. election plays a role with some of our customers. So it's a combination of factors that create hesitation in the context of uncertainty.
So do you anticipate that after the election, your customers will be able to be more certain about maybe CapEx decisions, stuff that really affects you?
Look, I think it starts with interest rates and the fact
more
that
so than
the
US
Fed
election.
Lower interest rates, I think, creates a more positive setup for calendar 25. No doubt that the U.S. election, assuming the outcome is known, come around next calendar year, will also clear some of the clouds, and we believe that calendar 25 should be a better year. Our chemical customers are expecting that as well. So all in all, we feel good about what's coming up in calendar 25.
Okay, so your customers, ExxonMobil, Shell, Saudi Aramco are among some of them. What is industrial AI? Are they using industrial AI? How is that different than just normal AI?
That's right. No, great question. Well, look, our customers operate very complex and really dangerous to operate assets, refineries, chemical plants, utilities, the grid, mines, and therefore they're very careful with what technology gets introduced into operating environments. Our industrial software really addresses operating environments. So when it comes to artificial intelligence, the question for that they have is, how does it come up with an answer? We started this journey ourselves 20 years ago, but in the last 10, 15 years, working with other companies, what we really came to understand is that in order to deliver artificial intelligence safely into these very complex assets, we had to provide sort of guardrails, the rules of the road for artificial intelligence, and that is done by our core technology that uses first principles of engineering, physics, chemistry, math, and that is what then provides the guardrails for AI. So the way we use artificial intelligence is we enhance our products with these capabilities, which at the same time create a safer deployment environment for artificial intelligence, and this is what we call industrial AI. So a combination of AI algorithms or large language models, domain expertise, and first principles of engineering, and we've named that industrial artificial intelligence.
How long? We've been talking about AI a couple of years at this point. I think probably the business press in general was a little later to the bandwagon than people who've been using this technology for many, many years, and I think it's fair to say that the technology has been used for years. When did you start using industrial AI?
Look, we started really working on products in the mid-90s with neural networks. Those products never really came to fruition. Computing power, really the adoption of the technology. We went into sort of the winter AI in the late 90s, but really coming out in the 2000s, 2010, we started to introduce capabilities in our products that our customers have adopted significantly. And like with every technology in this industry is a long ramp to adopt.
What's the hardware that you have to rely on for your AI?
The hardware?
Yeah, are you outsourcing, are you buying server space from folks? Do you have to actually buy any of the technology yourself? Do you have to get in line behind Tesla and XAI and Meta platforms to get yourself a Blackwell chip from NVIDIA?
No. Look, ultimately, these companies have their own sourcing departments, and they're very big companies, so they have access to the supply chain.
Are you talking about your customers?
Our customers.
Okay.
Yeah, our customers. But we have multiple delivery methods for our software. It could be cloud, it could be on-prem. A lot of it is on-prem. Look, ideally, we love to, and we do leverage NVIDIA edge servers for higher computing power, because ultimately what the cloud does is compute power. Okay, okay, you can do SaaS and all of that, but our customers are just interested in compute power. Instead of doing 6 or 7 scenarios for a refinery plant, they want to do 1,000. Because that means greater economic benefit, and that's about compute power. But at the same time, we've adopted our software so that it can be deployed on the cloud, and it is our customers, the ones that are procuring those servers, procuring cloud services, and then we deliver our software on those methods.
I'm so curious, like, what do you see as the next step here for your customers? I write a lot about the tech space, and so the next step there was, okay, well, the tech companies have purchased so much of this AI, now they have a show me story of can they actually use it. What is that narrative when it comes to companies like ExxonMobil and oil and gas companies?
Yeah, look, and that's a great question. If one thing that I started to notice 3-4 years ago in talking to our customers was because ultimately, if you're going to use AI, you have to have access to data. And they've aggregated all their data on the cloud. The issue is that data is not cleansed, is not structured, is not correlated, and they cannot act on the data. So what we've seen in the last 2-3 years is a greater narrative from our customers around data and their frustration with not having the ability to leverage that data. So we acquired a company a couple of years ago, a German company called Imation, that created industrial data fabric that they co-developed with BASF, the German chemical company, where they not only aggregate data, but they correlate the data, they cleanse it, they structure it, and then therefore you can act on that data. And this is where we see our customers are. Yes, they have some AI applications, but the fact is that the heavy lift on AI is data. And making sure that the data is of good quality, because as we know, garbage in, garbage out.
Yeah.
And so we've been focused on that.
Antonio, thanks for joining us on Bloomberg Businessweek. Antonio Pietri, President and CEO over at Aspen Technology.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Wow, TikTok, everybody. Less than 18 minutes to go until the close of trading on this day when the equity market is pretty much doing nothing.
The S&P 500 is up 0.02%, which I guess we can call unchanged.
Yeah, I think that's fair to say. Let's see what Dan Skelly has to say about this. He's head of wealth management, research, and strategy over at Morgan Stanley. Dan, good to have you with us this afternoon. I don't want to talk about today's trade, at least at the beginning, because there's not much to talk about right now. Big picture, though, 2 weeks out from the election, got geopolitical concerns. What's top of mind for you and for your clients?
Sure. Thanks for having us back on the program. Happy to be with you. So look, in terms of our individual clients, they are hyper-focused on elections. They're focused on debt and deficits and the path of those dynamics in either election outcome. And they're also increasingly focused on what's going on in the world. So these are all certainly questions that we're getting on a daily basis. And then, of course, a little bit more in terms of our equity perspectives. Does the rotation from growth and Mag 7 to value that started in July and August, does that persist? These are some of the main questions we're getting.
And what about when clients ask you about the outlook for the Fed? Because we've seen a pretty significant move back upwards in Treasury yields, crossing 4% on both the 2 and the 10-year. What do you make of that, and what do you tell clients who are maybe concerned about inflation risks reigniting and a Fed that's not going to be as aggressive in cutting as we once thought?
Yeah, excellent question, Emily. And look, when you see that backup in rates over the last 4 or 5 weeks or so, we would say 80–90% of that initially came from the strong jobs data that we got in September. And then really in the last week plus, we've certainly seen, as you have, increasing odds in the betting markets around red sweep in the elections. And so that's been kind of the balance in terms of that move higher. Look, I would say if you're seeing higher rates because of some term premium being embedded in a red sweep, that's something certainly to focus on. But if you're seeing higher rates as a function of more resilient and stronger economic growth, there's not necessarily a catastrophic outcome to that. There's ways to actually, frankly, get on board with that from a value and cyclical equity perspective, which is something that we've been doing really for the better part of the last several months.
I wanted to ask you to expand on that, because I know you had talked about the rotation at the beginning of our conversation. So is it time now to completely exit out of the market cap weighted S&P 500 and go all in into equal weight value? How are you thinking about, I guess, the details behind what the rotation trade actually looks like?
No doubt. And listen, it's a really important focus for us. And what we would say is, first, it's really difficult, given a third of the market is in technology and a lot of that in the Magnificent Seven themselves. It's really difficult to exit completely, because what you end up doing is you end up running tremendous tracking error and tremendous divergence risk, right, from the benchmark. So we look at it more as an idea of taking some overweights and profits and maybe going a little bit back towards neutral. That's the first point. The second point is we think that those sells or those trims can fund additions in financials, which we've seen really strong momentum since earnings began 2 weeks ago or so. Industrials, which we actually think works in either electoral scenario. I think both parties are focused on this trend of reindustrializing the U.S. And then lastly, the whole idea around the next sequence, the next phase of AI, maybe moving a little bit from semis and the tip of the spear more towards infrastructure, hardware, power, utilities, et cetera.
Hey, Emily brought this up yesterday, Emily, the Costin note. That's like everybody was talking about, right?
Mm-hmm. Yes.
The idea of big S&P 500 gains being over. This is the Goldman strategist, David Costin. We talked about this on the program yesterday. Dan, I'm wondering, look, this is what makes a market. People come out with what they think is going to happen. When you see a note like that or read about a note like that, what goes through your head?
So we are well aware of the commentary from downtown. And listen, what we would say is, historically, anytime your starting point on values is this high, 21 times, you certainly have to give, I think, some credence, some respect to not taking too much undue risk. Having said that, I would say two additional things that I think are highly relevant. Number one, the index has changed tremendously in accordance with changes in the economy. This used to be an economy that was more cyclical in nature, more manufacturing and export driven. Today, it's more services, consumer, and digitally enabled. And with those changes, you've seen all the different changes to the index. And I guess that last point, right, to follow on, I would just conclude by saying the index should trade at higher levels than it did in the past. It doesn't mean it can grow to the sky, but it should trough and peak at higher ranges than it did in the past. I guess very last point, just looking at history as we've seen in the last 2 years hasn't been as effective. Inverted yield curves, the fastest Fed tightening in 40 years, a lot of historical indicators have not been as reliable of late.
So if you use this as a starting point, a valuation that's this high, I get what you're saying. So then what if someone comes to you with new money right now? How do you deploy it? Since there are many areas of the market that are expensive.
Sure. So excellent question, Tim. So we made some changes at the Global Investment Committee, the GIC committee level, just 2 weeks ago, where we said for incremental money, we like putting money to work in large cap value, as we've talked about, mid cap growth, which is a little bit what we would call higher quality part of the smaller, the medium size cap curve. And then we also talked about, frankly, adding a bit to hedge strategies. We see this as an environment where if index returns, particularly impeded by the Mag 7 and the growth kind of market cap weighted ceiling on values, if index level returns are somewhat muted going forward, we like the idea of hedge strategies where you can exploit some of the idiosyncratic disruption going on, some of the dispersion going on at a sector level, which, by the way, Tim, I'll just add, a lot of people use the Mag 7 as a crutch in terms of lagging their benchmark.
Okay.
Let's not lose sight of the fact that for the 70% of the rest of the index, you've actually seen wider intra-sector dispersion this year than you have in 10 or 15 years.
Dan, love it when you join us. Got to come back soon. We appreciate it. Dan Skelly, Head of Wealth Management Research and Strategy Team over at Morgan Stanley.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.